take you through the stock market now, where the Nigeria Exchange All Share Index and market capitalization appreciated by 0.93% and 0.95% to close the week at 70,849.38 and 38.925 trillion naira respectively. A total turnover of 2.5 billion shares worth 45.2 billion naira in 32,815 deals was traded last week by investors on the floor of the exchange, in contrast to a total of 2.45 billion shares valued at 40.5 billion naira that exchanged hands last week in 37,959 deals. The oil and gas industry followed with 407.35 million shares worth 1.6 billion naira in 3,273 deals. The third place was the ICT industry with a turnover of 120.2 million shares worth 7.25 billion naira in 2,912 deals. Let's break this down for you to better understand what went down in the market yesterday. Ambrose Amadian, Chief Research Officer, Invest Data Consultant Limited, joins us live in the studio. Good morning and thank you for joining us.
Thanks for having me again.
The market ended on a positive note last week. What would you attribute this to?
For me, I would say that was a green market. For straight 6 days, we are seeing green in the market. For me, it's a good one. But at the end of the day, I would say there's a miss momentum, because if you look at the market rate compared to what we saw the previous week, about almost 60. For me, it's a good one, but because we're already also in the end of the year, seasonality have started, and this month of November, and I've said it in this program, last week Monday, that between now and April, it will also the best market performance. November being the fourth month, we're seeing investors taking advantage of the stock market, but despite we're seeing an impressive or higher yield, in the physical market, people are still looking the way of equity, because every other investment window in Nigeria is not giving investors a return that is close to what the market is delivering. For that, people are going the way of equity, and results that came for Q3 have shown investors that most of the companies they exchange had the capacity of paying them a better dividend compared to what they paid the previous year. For them, they are not taking advantage of this price to enter now before they see the final result in the first quarter of 2024. But I believe that I tell you that anytime, any day, don't fall in love with an up market, because no market will remain up in any market. That means you must factor in or prepare yourself for pullback or correction. So that when market pullback, you won't be be surprised the market was correcting. Now we are seeing people to take profit. Take profit when you pull back, you buy. That's why I tell you that in equity market, you must prepare for what? For a win. Also, you must be so that when it comes down, you will not be complaining, because if you have money to invest, when market can deliver value for you, take that value, will come down, you buy. That's why I say, people say buy low, sell high, but I believe that buy high is what I believe. But people say buy low, but it's a good matter in the market. But now that I see market going up, opportunity to catch your profit. When it comes down, you start buying again. For me, there's no cause for alarm after the market is still delivering. And also, compared to what I'm seeing, that's why we have seen inflation around the 27 already, and the equity market is around almost 38. Because the equity market ahead of inflation. That means it's only they can ever well. All that investment windows are giving you 16%, which is also below inflation. That means you must look the way you can edge against that. Your money give you value. Because if you are putting your money in fixed income instrument, at the end of 1 year, especially for 20B, the money you are putting 100 million, it can't buy what. But if you're in equity, you are going above inflation, you can use your money to that means you can see how people are able to preserve your money, or for me it's a good one.
But KPMG predicted inflation to end up December at 30% from the 26 points. It's KPMG. Okay. KPMG predicted. We just saw it on the news now, and that's from the 26.72% it ended September with. How do you see that affecting the market?
For me, that's also for me. No economy, no individual or another want inflation to be in the up direction. But when it comes, the low volatility, I tell you that despite the uncertainty in the economy, you must find how to make money.
You always say that.
Right. Now that we see that inflation is eating on, it's about the companies and all the eating individual. But when it comes, you must adjust the portfolio to meet inflation. But I don't believe that inflation will hit 30 immediately, like you just said, till December. And December is right around the corner here. We expect that from the 26.7 we saw, we expect to see around 27.8 or 27.5. But if it hit 28, fine, no problem. But for me, that also put those.
So you don't see it hitting 30, because some analysts are even saying the 30 is a bit conservative. That might be higher.
I don't see it hitting 30.
Okay.
I don't see 30. If what the government is doing now, if government what they are doing now, we're trying to play the padlock of first issue we're having. I tell you, a lot of what having is imported inflation, and also because the supply side is not there. That's what we are seeing. Also because of insecurity, farmers are not going to be found to bring enough goods from the farm. It's about if we need to address it. And now we say the government has released some buses. If that bus are running, then cost of moving those goods from the farm to the urban area starts coming down. But naturally, because of cost of energy, that's why we are seeing that inflation is galloping on a daily basis. But I mean that for those that are in the market, when it comes, there's a way to play around it. That's why I say when inflation comes, it will put those in physical money to deeper rate. But in the equity market, we need to have to adjust to companies that even when they adjust their price up, they will still begin, they will still be making profit, because if I pass my cost to you and you are buying at that price, I will still be making profit. It's when I pass away, you stop buying from there, you start adding. But if I need to pass my loss to my consumer, that's why there are some critical, call them inelastic product that even when you increase your price, there's still demand for it because of the essential or the important of those products or services. For me, this is where investors should also be. That's why I said prepare. When I say that any time, any day, don't fund the stock market. You must know how to hedge against inflation, also know how to hedge, in your portfolio. So when market turn, you are right when the work on the defensive stocks that will help you to manage your.
In other words, be on the lookout. Don't sleep. Let's talk about what to expect for today.
For me, I expect to see a mixed market, but today is first end of the week, and also eyes on inflation figure on Wednesday. That will also shape the market, and also the ultimate is the MPC meeting. What
do you predict for the inflation figure?
So I don't see it hitting 28, around 27.6 or 27.8.
That's still high. From 26.7
to 27.5, but not 8.28. I don't think it coming very soon. But I believe that as the market is now looking forward to see the MPC meeting coming on the 20th and 21st, but this week on Wednesday to see inflation figure, that will shape the market. But for this morning, we will be paying with caution. I'll tell you from here to with caution. But still, those people that has no flair for market and also they want to accumulate, because this is the time for you to reposition your portfolio. We have seen the third quarter numbers of these companies. You know you are able to pay you better dividend. But by then, even when they put back, that when you put back and buy more, it depends on your own investment trade. But for me, I expect to see a mixed market today and end of the week.
Okay, we'll look out for that. Thank you so much for the robust analysis.